Welcome to the deep dive. We're here to cut through the noise, get to the real story.
Yeah, digging beyond the headlines.
Exactly. And, have you ever stopped to think what it really takes for a big pharmaceutical player to navigate, well, everything, the global market complexities?
It's intense. It's not just about the science, is it? It's supply chains, market shifts, geopolitics.
A real high-stakes puzzle.
Yeah.
Every number, every decision, it's a critical piece.
And that's what makes it fascinating. Discipline, foresight, agility, it's all in there.
Which brings us nicely to today's topic. We're taking a deep dive into Divis Laboratories' recent Q1 FY26 results.
Right. And this isn't just a numbers game. We're looking for the story behind the numbers.
What do they tell us about the company's health, its strategy, where it's heading in this dynamic market?
Yeah, our goal here is to pull out the key insights, the really important stuff from their financials, the earnings call.
Give you the quick take on what's genuinely significant, stuff you might miss just glancing at the news.
Let's get into it.
Okay, let's start piecing it together. Headline numbers for Divis in Q1 FY26. How do they stack up?
Right, straight in. Consolidated total income, 2,529 crores for Q1 FY26.
Okay, 2,529 crores. How's that compare?
Well, year on year, that's strong growth. Quite a jump from 2,197 crores in Q1 of the previous year, FY25.
Ah, okay, so definite progress compared to last year.
Definitely. But looking quarter on quarter, so compared to Q4 FY25, it's actually a slight dip.
A dip from what?
Down from 2,671 crores in that previous quarter, Q4.
Interesting. So strong yearly growth, but a little pullback from the immediately preceding quarter. What about the bottom line? Profits?
Yeah, profit before tax, PBT. That came in at 733 crores for Q1.
733 crores. And the comparison story?
The same pattern, really. Solid increase year on year, up from 634 crores in Q1 FY25.
Good.
But again, down quarter on quarter. It was 864 crores in Q4 FY25.
All right. And profit after tax, PT, followed suit.
Yep, exactly the same trend. PT was 545 crores.
Good.
That's up nicely from 430 crores year on year.
But down from Q4.
Down from 662 crores in Q4 FY25.
Yes. Okay, so this pattern. Strong annual growth, but a slight easing off from the previous quarter's peak. How did management talk about this? Were they concerned about that QoQ dip? What was the tone?
That's a great question. The source material, like the earnings call transcript, it doesn't really give you the immediate market reaction or, detailed analyst views.
Oh, okay.
But the management commentary, it was all about framing these results positively despite the market challenges.
Oh, so?
They emphasized their operational resilience, their strengths, navigating tricky things like, well, geopolitical issues. It felt like they were focusing on their internal capabilities, their strategy.
Less about hitting a specific short-term number, more about the long game and their ability to handle bumps.
Exactly. Showcasing strategic clarity, not just chasing quarterly consensus, if that makes sense.
It does. So the numbers give us a snapshot, but the real insight comes from how they're making money. Let's pull apart those revenue streams. What's the mix? Generics versus custom synthesis.
Right. So for Q1 FY26, the split was pretty close.
Yeah.
Generics brought in 47% of the revenue.
Okay.
And custom synthesis, or CRAMS as they call it, was the slightly larger piece at 53%.
53%? Is that typical?
Well, management actually mentioned they prefer it to be around 50-50 over a full year.
Ah.
So this suggests things can be a bit lumpy quarter to quarter.
Yeah.
Depends on contract timing, project phases, that kind of thing.
Got it. And geographically, where's the revenue coming from? Still heavily export-driven?
Oh, absolutely. Exports dominate. 88% of their revenue in Q1 came from exports.
88%? Wow. Which regions are key?
Europe is the biggest chunk by far, contributing 58%.
58% from Europe. Okay.
And the U.S. followed at 14%.
And is that mix changing? Are they strategically shifting focus?
They actually clarified that, said the geographic mix is really driven by customer contracts and where those customers are located. It's not like a top-down strategic decision to target, say, Europe more. They follow the business.
Makes sense. Go where the demand is. Okay, so let's dig into those segments. Generics first. They mentioned pricing pressures impacting margins.
Yes, they did. They talked about maintaining a robust and competitive position, their words, but acknowledged persistent pricing pressures.
Persistent. Sounds like it's not going away quickly.
Well, they did say it impacted gross margins, but they also expressed some hope that these pressures might stabilize in the next few quarters. We'll see.
And how are they managing that pressure? You mentioned their backward integration model earlier.
Exactly. That's key to their resilience here. because they make a lot of their own crucial raw materials, their intermediates.
They're less reliant on outside suppliers.
Precisely. Gives them better cost control, more stable supply chain, consistent quality. Huge advantages when markets are volatile and prices are squeezed.
Right. Control and stability?
Plus, they have a massive market share, like 60 to 70% in several key APIs, the active pharmaceutical ingredients. That gives them clout.
Okay, so backward integration and market share help cushion the blow in generics. What about the other side? Custom synthesis, CRAMS. Is that smoother sailing?
CRAM seems to be their core growth engine, as they put it. They're seeing more business from global innovators who need scale and reliability.
So big pharma companies outsourcing manufacturing?
Essentially, yes, or development and manufacturing. They mentioned a healthy pipeline of proposals, customer visits, lots of R&D and pilot projects going on.
Promising. Any timeline on those projects turning into revenue?
They expect several of these pilot projects to move to commercial scale within the next 12 to 24 months. So it's a longer-term play, but potentially very significant. It's about strategic partnerships.
Got it. Different dynamic to generics. Now, costs, always crucial. What impacted margins beyond just generic pricing?
Well, material consumption was stable, around 40% of sales. Raw material prices were also stable, good availability. That's positive.
Okay. So what did hit margins?
They pointed to additional costs, specifically logistical costs, think Red Sea shipping problems, and broader geopolitical issues.
Ah, those external factors again.
Right. And interestingly, they noted the benefits of that backward integration are already baked into their gross margin. Suggests it's preventing even worse pressure.
So it's helping, but can't eliminate everything. Any other cost or financial factors?
One significant positive was Forex. They had a foreign exchange gain of 39 crores in Q1.
39 crores. That's substantial compared to last year.
A big turnaround. Last year, same quarter, they had a Forex loss of 1 crore.
Wow, okay. That gain definitely helps the bottom line. And if you strip out currency effects, how did the core business grow?
Good question. On a constant currency basis, they achieved 14% growth for the quarter.
14%. That's pretty healthy underlying growth then, despite the headwinds.
Yes, it shows the core operations are performing strongly.
Okay, so we've looked at the what and why of the Q1 numbers. Let's shift to the future. How are they investing strategically? What new capacities or innovations did they talk about?
This is where it gets really interesting, I think. Their big Unit 3 facility in Kakinada. It became operational back in January 2025.
Kakinada, Unit 3.
Right.
What's its focus?
Strategically, it's making key starting materials and intermediates. So it ties back to that backward integration theme.
Reinforcing self-sufficiency.
Exactly. But here's the clever part. By doing that, it frees up GMP capacity. That's good manufacturing practice certified capacity in their older Unit 1 and Unit 2.
Ah, so the established units can take on different work.
Yes. New molecules, more complex stuff, validations, potentially higher value projects. It allows them to be more flexible and chase new opportunities.
That's smart. So Kakinada makes the raw ingredients, freeing up the fancy kitchens for more complex recipes.
Kind of, yeah. Good analogy.
And are they running close to full capacity now with Kakinada online?
They said current utilization is around 80%, which, interestingly, they consider ideal for our organization.
80% is ideal, not higher.
Seems they like having that buffer. Room to take on new orders quickly, manage maintenance without straining the system, gives them flexibility.
Makes sense. And regulatory approvals for Kakinada itself.
Those are still in progress. They expect it'll take another 1 to 2 years before Unit 3 can supply directly to customers. Right now, it's mainly feeding their internal needs.
Got it. So physical capacity is expanding. What about the science side? R&D, innovation?
Definitely investing there, too. They're boosting capabilities in advanced platforms. They specifically mentioned 3 areas.
Which are?
Flow chemistry, which is about continuous, efficient, often safer reactions. Biocatalysis, using enzymes for greener production. And green chemistry, generally minimizing environmental impact.
So efficiency and sustainability through tech.
Right. They're working on these at a pilot scale with some innovators now. It signals a real commitment to modernizing their processes.
And didn't they mention something about peptides? That's a hot area.
Yes. Big point. They've commissioned new capacity for solid-phase peptide synthesis, SPPS.
SPPS, okay.
And apparently it's getting strong interest from large companies, particularly those working on GLP-1 treatments.
Ah, the diabetes and weight loss drugs. That's huge.
Exactly. It puts Divis right in the middle of a massive growth market. But they cautioned it's a slow process.
Why slow?
Qualification, validation, regulatory approvals, customer approvals all take time. They estimated 12 to 24 months before these peptide projects reach commercial scale.
Okay, so not immediate revenue, but a major future pipeline.
Definitely. They've already bought larger raw material volumes based on customer needs and are working with multiple partners. They did clarify they make peptide fragments, not the whole drug, and couldn't give specifics due to confidentiality.
Understandable. Now, all this expansion, Kakinada, SPPS, R&D, costs money, what's the investment picture? CapEx.
They're anticipating total capex for this financial year, FY26, to be around 2,000 crores.
2,000 crores. That's a serious number.
It is. It's going towards these key projects, expanding capacity generally, and upgrading technology.
How much have they spent already?
In Q1, they capitalized assets worth 261 crores, and 114 crores of that was specifically for phase 1 of Kakinada.
Okay.
And they also mentioned having capital work in progress of 1,319 crores. So lots of investment already underway.
And are these big spends linked to actual customer commitments? Or is it speculative building?
Good point. They said they're executing 3 major CapEx programs that are backed by long-term supply commitments.
Ah, so secured business.
Mostly, yes. These are primarily custom synthesis projects. Some are already commercial, others just finished phase 3 trials. Gives them some future visibility.
Right. Okay, let's pull back again. Beyond the specific projects and numbers, what was the overall vibe from management, their vision, the challenges they see?
The recurring themes were strategic clarity, disciplined execution, and agile decision-making. Basically, staying focused and flexible in a tricky environment.
Buzzwords, maybe, but important ones.
True. They also talked a lot about operational excellence, using digitalization, data analytics, automation, making the whole operation smarter, faster.
Leaning into tech for efficiency gains. What about sustainability? You mentioned green chemistry. Was that a big focus?
It really seemed to be a very strong theme. They stressed their commitment to sustainable and inclusive growth.
What does that mean in practice for them?
Well, things like recovering and reusing 95% of their solvents, optimizing energy, water use, but also their CSR work, corporate social responsibility. They highlighted initiatives helping tens of thousands of students, over 100,000 villages.
So trying to balance profit with planet and people.
That was definitely the message, an unwavering commitment, they called it.
Okay. And the flip side, what challenges are keeping them up at night?
The usual suspects, really. Geopolitical uncertainty, that Red Sea problem messing with shipping, and those persistent pricing pressures in the generics market.
So mostly external factors they have to navigate.
Yes. Their strategy seems built on having strong internal foundations to weather those external storms.
Makes sense. What about specific growth drivers they're excited about? New products coming soon?
On the generic side, yeah. They mentioned new launches like Rivaroxaban and Tigecycline.
Yeah.
Validations are done, just waiting on customer approvals to start supply in the next 6-12 months.
Okay. Near-term potential there.
And in custom synthesis, besides the peptides we discussed, they mentioned contrast media products.
Contrast media, like for MRIs.
Exactly, non-iodine-based ones using gadolinium compounds. But those are further out, maybe 18 to 24 months before they contribute revenue.
Another long-term pipeline filler. Anything else?
Their nutraceutical business actually had a good quarter. Jumped to 250 crores from 178 crores year on year.
Oh, really? Vitamins and supplements.
Yeah, that side of things. They said it's showing steady improvement after a dip post-COVID. They'll add capacity there as needed, adds a bit of diversity.
Good to have that steady earner, too. Okay, last piece. Financial health. How solid is the foundation for all this investment and growth? Balance sheet strength.
Looks very solid indeed. They've got a lot of cash on the books, 4,250 crores.
4,250 crores in cash.
Yeah, plus receivables of 2,521 crores and inventory of 3,870 crores. They mentioned keeping a prudent buffer stock because of global uncertainty, but aiming for leaner inventory over time.
That cash pile gives them a huge cushion. What about debt? Are they leveraged?
Well, they didn't explicitly say debt-free in the call,
Well,
but the financials show tiny finance costs, just 3 crores consolidated. That implies very, very little debt.
so essentially debt-free or close to it. That's impressive financial flexibility.
Huge advantage. Means they can fund that big Euro 2,000 crore CapEx plan, mostly from their own earnings, without relying heavily on loans, especially when interest rates might be a concern.
Definitely. So wrapping it up, what's the key takeaway for someone trying to understand Divis Labs right now?
I think it's about resilience and strategic patience. The backward integration and market share in generics helps them sustain through pricing pressure. They don't see it making manufacturing unviable.
Okay.
And on the custom synthesis side, it's all about those long-term contracts, that strong pipeline, even if they can't shout about specifics due to confidentiality. You get a sense of strong future visibility.
So, a company playing the long game, built on internal strengths, investing carefully for future growth areas.
Yeah, that sums it up well. They're navigating the current choppiness while clearly building for what's next.
Right. So, just to recap our deep dive, Divis Labs showing real resilience, strategic growth despite challenges. Key strengths are that backward integration, the big investments in new capacity like Kakanata and this R&D pipeline, especially with things like peptides for GLP-1s generating buzz.
Absolutely. They're enhancing self-sufficiency, freeing up capacity for higher value stuff, managing current pressures, all while keeping that financial base incredibly strong.
It paints a compelling picture. Now, here's something to think about as we finish. We heard Divis talk a lot about sustainability, green chemistry.
Definitely a recurring theme.
So consider this. How might that deep commitment evolve? Could it move beyond just an operational good practice and become a real hard-edged competitive advantage in the global pharma world?
That's interesting, like attracting partners or customers who prioritize that.
Exactly. Could it shape future partnerships, market perception, making sustainability not just good for the planet, but actually good for the bottom line in a very direct way?
Yeah. How that shifts from nice to have to must have for competitive positioning definitely gives you something to chew on beyond the quarterly numbers.
Something to think about. Thanks for joining us on the deep dive.